All right, let's dive into something truly iconic today. We're taking a deep dive into the world of one of the most, well, legendary luxury brands on the planet, Ferrari. We've meticulously combed through their latest Q2 2025 earnings call transcript and all the supporting financial documents. Our mission really is to pull out the most important insights, help you quickly grasp what makes Ferrari tick, both, financially and in its relentless pursuit of excellence. You're going to discover how they're navigating global challenges, launching these incredible new vehicles, and even venturing into, well, surprising new sports.
And what's truly remarkable here, I think, is how even amidst all this uncertainty, macroeconomic environment, geopolitical tensions, market volatility, Ferrari just continues to execute.
Yeah.
Their business plan, it's all focus, discipline, confidence. And that really stems from the solidity, the uniqueness of their business model. Plus, they have this amazing visibility with their order book and, of course, the unwavering loyalty of their community. They genuinely believe they're well prepared to navigate potential macro threats. And Q2 really showed their remarkable adaptability.
Okay, so let's kick things off with the numbers then. Because on the surface, you might notice deliveries were pretty flat. 3,494 units. That's only 10 more than the previous year. But don't let that fool you. The financial metrics, they tell a very different and much more impressive story. Revenues climbed to nearly 1.8 billion euros. EUR 1.787 billion to be exact, which is a solid 4.4% growth year over year.
Yeah, and that revenue growth is just the start of the good news, really. Profitability was strong, just across the board. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, a key measure, it exceeded EUR 700 million. EUR 709 million specifically. That's up 5.9% with a really impressive margin of 39.7%.
Wow.
And operating profit, EBIT, which gives us a clearer picture of core business profitability, that rose to EUR 552 million, an 8.1% increase, margin of 30.9%. And their industrial cash flow, which is crucial for future investments, stood at EUR 2.3 million, leading to a net profit of EUR 425 million and diluted EPS earnings per share of EUR 2.38.
So how did they pull that off? Such strong financial growth with virtually flat deliveries. What's the secret sauce there?
I think that's the real magic trick, isn't it?
Yeah.
It was primarily driven by what they call a richer product and country mix.
Yeah.
So basically, they're selling more of their higher margin, more expensive models and directing them to more lucrative markets. On top of that, significantly higher personalizations played a huge role.
Ah, the personalizations.
Exactly. Imagine customers asking for, bespoke paint jobs, unique interiors, exclusive features. These personalizations alone accounted for approximately 20% of total revenues from cars and spare parts, especially supported by demand for high-end models like the Daytona SP3 and the SF90XX family. Essentially, customers aren't just buying a car, they're commissioning a bespoke piece of art, and that carries a premium.
Right. And on the product side, the deliveries are driven by the 296 GTS, the Pure Sang, and the Roma Spider, while the SF90XX family and 12 Cylindri family also continue their ramp-ups. The Daytona SP3 deliveries, though, are winding down, planned to conclude in Q3 2025, they said. So, considering that specific product mix, how do you think Ferrari managed to grow revenues so significantly without increasing overall volume?
Well, it's a deliberate strategy, it really is. They are prioritizing the quality of revenue over the sheer quantity of units. By focusing on these higher value models and maximizing the bespoke options, they're just extracting more value from each car sold. It's a testament to their brand power and the exclusivity they maintain so carefully. You're buying into a lifestyle, not just a vehicle.
Right. Now, one factor that's always a big discussion point, especially in global trade, is tariffs. What kind of impact did the new U.S. import tariffs have on Ferrari in Q2?
Good question. And surprisingly, there was no significant impact in Q2 because Ferrari was able to leverage inventory they already had present in the U.S. Smart move. Their commercial policy, which remember previously reflected a 27.5% tariff, well, that won't change until the new 15% tariff is actually implemented, not just agreed upon.
Okay, so they wait until it's official.
Exactly.
Yeah.
And crucially, they're very transparent with clients. They separate the tariff on the invoice, make it clear, and they haven't observed any client cancellations or postponements because of tariffs. Any wait-and-see attitude from clients is more likely linked to the naturally limited availability of certain models and the intense anticipation for upcoming launches. People want the next thing.
Makes sense. And speaking of confidence, Ferrari also expressed stronger confidence in its full year 2025 guidance. Why the increased optimism?
That's a direct result of two things, really. Firstly, that half a percentage point risk they'd previously flagged on their profit margins due to tariffs. That's now been removed, thanks to the recent agreement on lower U.S. duties.
Okay, so that uncertainty is gone.
Right. And secondly, they're expecting lower industrial costs in the second half of the year compared to their initial forecasts. This is partly due to an easier comparison against higher racing costs last year, but also combined with reduced quality costs and better supply chain dynamics. Less inflation, basically. And it's important to note, this doesn't reflect any postponements or delays to their programs. It's just genuine cost efficiencies and a clearer tariff picture.
Now, here's where it gets really interesting, I think. Let's pivot from the numbers to the actual machines.
Oh, yeah.
Ferrari's product roadmap is always keenly watched, especially with their first all-electric vehicle on the horizon. What are the key updates on their product development, particularly the Electrica?
Oh, it's a huge milestone.
Absolutely.
Ferrari is completely on track with the Ferrari Electrica, their first all-electric vehicle. CEO Benedetto Vigna himself had the pleasure of driving it on the racetrack and apparently sounded incredibly excited for the upcoming launch.
I bet.
Yeah. The unveiling is confirmed for Q4 2025, specifically October 8th. And here's the crucial part, the positioning. The Electrica is framed as an addition, not a transition, to their offering.
Addition, not transition. Okay.
Right. This isn't about replacing internal combustion engines wholesale, not yet anyway.
Sure.
It's about expanding their community, attracting both existing loyal clients and potentially new ones who might be looking for a different kind of Ferrari experience.
That addition philosophy really aligns with their whole strategy, doesn't it? Grow the community without diluting that legendary exclusivity. What other exciting developments are on the horizon? Any new models?
Exactly. And yes, they continue to evolve their stunning offering. The Ferrari Amalfi was introduced just this past July. This marks their 11th model of the 15-model roadmap they announced back in 2022, and it's their third launch of 2025, following the 296 Speciale and Speciale.
So the Amalfi, what's the story there?
It's a new V8 range model, a 2+ coupe that's a two-seater with two smaller seats in the back. It replaces the Ferrari Roma, and it's meant to redefine contemporary sportiness, blending high performance, versatility, and, well, refined aesthetics. The name, of course, is a tribute to southern Italy. And what's strategic about the Amalfi is its explicit design to improve offerings in countries like China.
Ah, the China angle.
Yes, where models with larger engines like the 12-cylinder face higher taxes.
Yeah.
So this V8 makes sense there. It's also a clear move to attract new clients, maybe from other brands, into the Ferrari fold.
And it sounds like the market is absolutely ready for these new models. The order book is incredibly strong, you mentioned, stretching well into 2027, without even considering these newly launched cars.
That's right. All current range models are substantially sold out. Demand for the 296 Special family is significantly high, nearly reaching full life cycle coverage already. And in Asia, excluding mainland China, there's a record backlog. It's quite something.
Sure.
This robust order book, even with limited current offerings, truly showcases the effectiveness of their deliberate allocation strategy. It's all about preserving brand exclusivity and maximizing the power of anticipation for these new, meticulously crafted models. It's a strong signal of brand health, no question.
And beyond the vehicles themselves, Ferrari also continues to invest deeply in what truly makes them, well, Ferrari. Client centricity, product excellence, technology advancement. It's also inspiring to hear about the human element, too. 341 colleagues were internally awarded in 2024 just for developing patent ideas.
Fantastic.
Yeah. And new infrastructure is clearly key to their future. The production ramp-up of their e-building is proceeding. As is the construction of a new paint shop, the walls are finished. Equipment installation is next, they said. They even began construction of a new track specifically for sport car testing, aiming to enhance accuracy and repeatability in their vehicle development.
Constantly refining.
Exactly. Now, of course, Ferrari isn't just about road cars. Their racing activities play such a crucial role in their brand and community. We saw them introduce the new 296 GT3 EVO race car set to debut in the 2026 season. And in a major win, the Ferrari team secured its third consecutive victory at the grueling 24 Hours of Le Mans, which means they get to keep the winner's trophy forever.
Huge achievement.
Absolutely. In Formula One, while the season started, quote, below expectation, the team is constantly fighting for podiums and wins. And in a sign of stability, Fred Vasseur's contract as team principal of Scuderia Ferrari HP has been extended for multiple years.
And that connection between racing and commercial success for Ferrari is just undeniable. It's a virtuous cycle, really, clearly evidenced by increased sponsorship and commercial revenues tied to their improved F1 ranking. These racing activities don't just build the brand, they significantly enhance the experience for their racing clients, deepening their connection to the whole Ferrari legacy.
Their racing prowess is undeniable, but it seems Ferrari's appetite for innovation extends far beyond the racetrack now. What can you tell us about this intriguing Ferrari hypersail project? Sounds completely different.
Oh, this is truly groundbreaking stuff.
Yeah.
The Ferrari Hypersail project involves a revolutionary boat currently under construction in Italy, and it marks an unprecedented new sporting challenge for them in the world of sailing.
Sailing.
Yeah, it's a prime example of what they call open innovation and two-way technological transfer between their sport cars and, now, the nautical sector. Think about it. Aerodynamics, energy efficiency, power management, flight control systems. These are areas where expertise in one can directly benefit the other.
Yeah.
This project allows them to, as they put it, keep on pushing the limits of possible in a brand new arena.
Fascinating. Okay, let's quickly touch on some specific questions from their earnings call that offer maybe deeper insights into the company's thinking. For instance, what about residual values on their models? Any concerns there?
They mentioned some models in the UK, and US experienced what they termed under pressure residual values, which led to some commercial actions to adjust product placement. However, Ferrari indicated this was nothing strange or a major concern for the company, suggesting it's kind of part of normal market fluctuations.
Okay, nothing alarming. And the Q2 hybrid share. It was 55% traditional ICE, 45% hybrid. How does that fluctuate?
Right, well, that ratio really just depends on the specific models offered in a given quarter and their production volumes. For example, if they're selling a lower volume of the, say, 296 Space Spelly compared to the 296 GTD in one quarter, you'd naturally see more ICE models in the mix for that period. It shifts.
Got it. And R&D capitalization?
That just depends on the pace of development. New car models, racing activities like Formula One and the World Endurance Championship, it follows the project lifecycle.
Okay, so looking ahead to the second half of 2025, what does Ferrari anticipate? What's the outlook?
They are deliberately anticipating reduced deliveries compared to 2024. Again, that focus on prioritizing quality of revenues over sheer volume. The product mix will be technically softer due to the Daytona SP3 phasing out in Q3, and only initial units of the F80 shipping in Q4. However, the overall second half mix is expected to be pretty neutral compared to last year because the SF90XX and 12-cylinder ramp-up should compensate for the Daytona. Additionally, they expect higher SG&A selling, general, and administrative expenses due to corporate and commercial activities planned for the remainder of the year.
So what does this all truly mean for Ferrari when you boil it down? Our deep dive into their Q2 2025 performance reveals, well, a company confidently navigating these global complexities with really strong financial results. They have an exciting product pipeline, including that highly anticipated first EV, strategic expansion into new markets, and even new sports like sailing, and just this relentless, almost obsessive focus on client engagement and innovation. Precisely.
Yeah.
And I think in a world where agility and flexibility are absolutely paramount, Ferrari really highlights its ability to define clear boundaries for innovation, empowering its people to find solutions and adapt quickly. The company's unique business model and that visible order book provide a truly robust foundation for this confident approach. It gives them breathing room.
So here's something for you to think about. How will Ferrari's deliberate strategy of addition, not transition for its Electrica, combined with its audacious expansion into areas like the Hypersail project? How will that reshape the very definition of luxury performance in the coming decade? And maybe more broadly, what might this radical approach mean for other industries facing similar technological and market shifts? Food for thought.